Well, I'm delighted to be here. It's always great to get out of Washington. And I had half an hour in my hotel room before I came over here. And all I saw were political ads. So it's like I'm right back in Washington again. I don't know how you can endure 3 more months of this. Well, I'm here tonight to talk about many issues, including the one that I think is the most important issue in the second half of this year for all of you as investors. And it's not the election. It's the fiscal cliff and what it means for your taxes, what it means for a wide range of issues we'll cover in the next 30, 35 minutes. And then, as Dave said, we'll have plenty of time for questions. Sadly, I'll tell you at the beginning that I'm not the most optimistic fellow in the world. I'm not a believer in the rally we've seen for the last week or two. I think there's many, many reasons to be cautious. Maybe Dave will leave the bar open a little longer after you hear me speak. But as I say to all of my audiences lately, coming from Washington, I would just ask you to not shoot the messenger as I go through all of these things that are happening. Let me also just say at the very beginning that I do not come here as an advocate for one candidate or another. I'm not here to tell you the left wing is bad or the right wing is bad. I don't think that's productive for you as investors. And frankly, I think after all these years, I'm a cynic more than anything else. Quick story, just to reinforce my cynicism, there was a poll this winter in the Washington Post. It showed that 11% of the public had a positive rating of Congress. So I looked at that in the morning and I thought, well, I wonder what all my Republican friends would think. What does it mean for Boehner and McConnell and Cantor? Then I looked at it and I said, I wonder what all the Democrats would think about this, you know, Pelosi and Harry Reid. Then I looked at it again and said, what were those 11% thinking? How could anybody have a positive rating of a Congress that is this dysfunctional? And at that point, it dawned on me once again what a cynic I've become after doing this for so many years. Well, let me start, as I always do, with a couple of quick comments on where we see the economy. I'm very fortunate. I get to work with a former Fed official, the former Vice Chairman Don Cohn, who is still very well plugged in. I get to talk to Don frequently, and they're worried at the Fed. They're very concerned. The payroll number last Friday was good, but it wasn't great. Unemployment actually ticked up to 8.3. They're quite worried at the Fed that growth in the second half of the year might not even get to 2%. This is a scenario that will keep the Fed very accommodative. It's controversial. I always joke, the most heated criticism of the Fed that I get on a regular basis is from my mother, who's 88 years old. I call her up in New Hampshire and she gives me hell as if I could do something about the Fed's interest rate policy. She was counting, like probably many of you, on a higher yield in her retirement, and she certainly is not getting that high yield because of the Fed's policies. I don't see them changing. I think the option of doing even more, so-called QE3, is on the table. What that means in English is that they would add even more to the balance sheet to drive rates, market rates, even lower. Frankly, I think that this strategy will yield pretty meager results. But the fact is, they will stay accommodative for quite some time. I joke that someday the Fed will put out an announcement that they will keep the Fed funds rate at 0 for the rest of my life. I think it may be that long. They're in no hurry. I think interest rates will stay exceptionally low for quite a while. The most intriguing question that I get is whether the Fed at some point might try to raise the inflation target. Could they, as many people suspect, especially people who like gold, could the Fed actually think about reflating? There are several officials, headed by the Fed president in Chicago, Charles Evans, who have advocated a temporary increase in the inflation target from 2 up to 4. Well, once you start saying, well, we're going to temporarily raise our inflation target, do you get on a slippery slope? And do people start thinking, well, the Fed is really serious about reflating? It's a serious issue. There are other governors who are quite dovish. This is the most dovish Fed I've ever seen in my career. People like Janet Yellen, Bill Dudley, Rosengren in Boston, who made some waves yesterday. But I think at the end of the day, the chairman, Ben Bernanke, would be aghast at any move that would raise the inflation target. So I don't see that coming. But I do see the Fed being nervous, maybe having to do more with an economy that seems frozen.